Welcome back to the channel. Today I am breaking down how to create the perfect crypto portfolio as a complete beginner in 2025. This is an evergreen guide, meaning you can watch it anytime this year and still get massive value, whether you're starting with $50 or $5,000. This video will give you the exact blueprint for success. We'll cover the right portfolio structure, the biggest mistakes beginners make, how to allocate your money, and which coins belong in a beginner-friendly portfolio. We'll also dive into risk management, dollar cost averaging, and the all-important exit strategy. First, let's understand what crypto is in 2025. It's no longer just a speculative idea. It's a full-blown digital financial system. We have store-of-value assets like Bitcoin, smart contract platforms like Ethereum, real-world asset tokenization, and even AI-driven blockchains. But this is also where beginners fail. They jump into risky coins, chase pumps, have zero strategy, and invest emotionally. This video is designed to fix all of that. Your goal as a beginner isn't to get rich overnight. It's to build a balanced portfolio that minimizes risk, maximizes long-term upside, and survives market volatility. So, what makes a good portfolio? It's all about balance. I use a simple 3-layer framework that professionals use. Layer 1 is your core, making up 50% of your portfolio. These are your low-risk, large-cap established assets. Layer 2 is for growth, taking up 30%. These are high-quality mid-caps with strong fundamentals. And Layer 3 is for moonshots, the final 20%. These are small-cap coins with high potential but also high risk. This structure prevents you from blowing up your account while still giving you that massive upside potential we're all looking for. Let's build your core portfolio, the foundation of your crypto wealth. This is 50% of your total investment. We'll start with Bitcoin, the king. It's the most stable crypto, has global adoption, and major institutions are buying it up. Think of it as your long-term hedge and the backbone of your portfolio. You just buy and hold it, no trading. Next up is Ethereum, which gets 15% of your allocation. ETH is the engine of the entire smart contract economy, powering thousands of decentralized apps and generating real revenue. It's the tech stock of crypto. To round out our core, we'll add Solana, getting 10%. SOL is known for being fast, cheap, and having an explosive ecosystem with real adoption in payments and DeFi. Now for your growth assets, which make up 30% of your portfolio. These are your medium-risk, high-potential plays. We'll divide this into a few key narratives for 2025. First, the Layer 2 ecosystem, which is crucial for scaling it. You should allocate 10% here, choosing one or two from projects like Polygon, Arbitrum, or Optimism. They have billions in value, locked in huge long-term growth potential. Next is the AI crypto narrative, one of the biggest trends. Allocate 8% here, picking one solid project like Fetch AI or Render. Allocate 7% to a leader in this space like Chainlink or Make. Finally, 5% goes to decentralized storage, which is vital for the future of Web3. You can choose a project like Arweave or Filecoin. The last part of our portfolio is for the moonshots. This is where you can find those exponential gains, but you must invest small, manageable amounts. I recommend choosing 2 to 4 small-cap coins that have strong development, real utility, and are still under the radar. Some examples could include projects like, say, Network, Jupiter, Sui, or Wormhole. These are just examples. Always do your own research. The key is to find projects with genuine organic growth, not just hype. Your moonshots provide that exciting upside, but they are speculative, which is why we only allocate a smaller portion of our capital to them. Now, how do you actually invest? You use a strategy called dollar cost averaging, or DCA. This is perfect for beginners because it removes emotion from the equation. Instead of trying to time the market perfectly, which is nearly impossible, you invest a fixed amount of money at regular intervals. For example, you could decide to invest $100 every single week. Consistency is far more powerful than trying to find the perfect entry point. This simple strategy builds long-term wealth and reduces the stress of watching market charts every day. Risk management is non-negotiable, especially for beginners. Here are the golden rules you must follow. First, never invest more money than you can afford to lose. This is crypto, and it's volatile. Second, don't chase pumps. If a coin is already up 100% in a day, you've likely missed the boat. Third, never put more than 20% of your total portfolio into high-risk small caps. Our structure already accounts for this. Also, it's wise to keep about 10% of your total crypto funds in stablecoins like USDC or USDT. Finally, as your portfolio grows, get a hardware wallet to keep your assets secure offline. Last but not least, you need an exit strategy. This is where most beginners fail. They never take profits. Having a plan to sell is just as important as having a plan to buy. You don't have to sell everything at once. A simple strategy is to take profits in stages. For example, you could sell 10 to 20% of your position when it doubles, or does a 2x at a 3x. You could sell another 10 to 20% at a 5x. Maybe you sell another 20 to 30%. You can hold the rest for the peak of the bull market. This secures your gains along the way and reduces your risk. Remember, profit isn't real until you've cashed it out, and that is your complete crypto portfolio guide for beginners in 2025. If you apply this structure, stay consistent with your dollar cost averaging, and invest with discipline, you will be years ahead of 95% of new crypto investors. This blueprint is designed to build sustainable wealth, not to gamble. If you found this guide helpful and want more deep dive videos like this, let me know in the comments. Don't forget to like, subscribe, and share this video to help other beginners learn to navigate the crypto space the right way. Thanks for watching, and I'll see you in the next one.